NIO stock is entering Tuesday's U.S. session at an intriguing crossroads. The company has just posted one of its strongest monthly delivery results in months, reporting 31,305 vehicles delivered in August, a 55% increase year-over-year. Yet because of the Labor Day holiday, U.S. markets haven't had the chance to react. That sets up Tuesday's open as the first real opportunity for Wall Street traders to digest the delivery beat. On Friday, NIO closed the week at $6.38 per share, down about 2% on the day, though it clawed back a couple of cents in the aftermarket. That marked more than a week of closing above $6, something the stock hadn't achieved in over 6 months. Against that backdrop, the August delivery report could be just the kind of catalyst needed to test higher levels when U.S. markets reopen. This is why Tuesday matters. It's not just another trading day. It's the convergence of three forces: fresh delivery momentum, a resilient new technical base, and anticipation ahead of the company's Q2 earnings call, scheduled for September 2nd in China. And there's another layer worth watching closely: NIO's performance on its other exchange listings in Hong Kong and Singapore, which can act as leading indicators of sentiment before U.S. trading begins. When a company has multiple listings, it gives investors a chance to see how different markets are reacting in real time. For NIO, its Hong Kong and Singapore trades can provide early insight into how the delivery numbers and earnings expectations are being absorbed outside the U.S. So as we prepare for Tuesday's open, it's not just about watching pre-market volume in New York, it's about seeing how global investors are already positioning. Let's dig deeper into why these August delivery numbers matter. For much of the year, NIO deliveries were uneven. July was weaker than expected, and investors questioned whether the company could regain momentum against fierce competition from BYD, Tesla, XPeng, and even newcomers like Xiaomi. The August beat changes that narrative. It shows that the company is regaining its footing, particularly as new models like the redesigned ES8 premium SUV and the mass-market Onvo L90 come into play. The ES8 matters because it keeps NIO in the conversation in the premium EV segment, directly challenging Tesla's Model Y. It reinforces NIO's identity as a brand that can deliver luxury, performance, and technology. But the bigger story is the Onvo L90. Analysts believe this vehicle alone could add 10,000 units per month to NIO's delivery totals by the fourth quarter. Considering the company currently sells between 20 and 30,000 cars per month across all models, that would represent a major step change. August's strong delivery results could be a sign that the ramp-up is already underway. Now, let's talk about the stock itself. For months, $5 was a stubborn ceiling. NIO simply could not break through it. Every rally attempt failed. Then in late August, the stock surged nearly 40% in a matter of days, breaking above 5, then 6. Since then, it has consolidated between 6 and 7, but the critical point is that it has not slipped back under 6. That's not just a technical win, it's a psychological one. It signals to investors that this is not just another false breakout. It's a base. And if 6 is the new floor, then 7 becomes the next ceiling to test. That's why Tuesday's open is so important. U.S. traders will finally have the chance to react to the delivery beat, and the question is whether that reaction is strong enough to push NIO toward that $7 mark. If buyers step in with conviction, it could set the stage for another leg higher. If not, the stock may simply continue consolidating, building more strength before its next breakout attempt. This brings us to the upcoming Q2 earnings call. Scheduled for September 2nd in China, this will be the next big event for NIO. Deliveries are only part of the story. Investors want to see progress on margins, clarity on profitability, and insight into how new models are being received. They'll also be listening for updates on the Firefly brand, which is expected to launch in Europe, Asia, and Latin America in 2025, as well as progress on NIO's unique battery swap network, which could be moving closer to profitability. Earnings calls are always critical, but this one carries extra weight. That's because sentiment around NIO has shifted. Just a few weeks ago, the stock was struggling to stay above 5. Now it's defending 6 and delivering strong monthly sales. If management can reinforce that momentum with a clear narrative about profitability and scale, it could cement the turnaround story. On the flip side, if guidance is weak or costs remain stubbornly high, it could reignite concerns about dilution or execution risk. That's why investors should keep one eye on Tuesday's open and another on the upcoming earnings call. The two events are connected. Strong delivery momentum can boost expectations heading into earnings. But the earnings call will determine whether that optimism is justified. And don't forget about NIO's performance on its other exchange listings. Before US markets reopen on Tuesday, NIO will already have traded in Hong Kong and Singapore. Those markets can give us a hint of how global investors are positioning themselves ahead of the US Open. Are shares in Hong Kong rallying on the delivery numbers? Are volumes picking up in Singapore? These are signals that can help US investors anticipate what's coming. It's also worth remembering that NIO's story is bigger than just cars and deliveries. It's about brand building. The company has leaned into community-driven strategies like factory tours and customer engagement, creating loyalty in a way that resembles Tesla's early days. It's about global ambition, with Firefly laying the groundwork for expansion outside China. And it's about differentiation, with the battery swap model offering a unique edge in a crowded market. These elements don't always move the stock on a day-to-day basis, but they build the long-term case for why NIO deserves attention. So as we head into Tuesday's session, here's the bottom line. NIO has delivered strong August numbers, showing that its recovery is gaining traction. The US holiday meant that Wall Street hasn't priced this in yet, so Tuesday could be the first real test of whether delivery momentum can fuel the next leg higher. The $6 floor has held for more than a week, giving the stock a solid base. The $7 mark is the next key level to watch. The Q2 earnings call is around the corner, providing the next big catalyst. And the company's other exchange listings in Hong Kong and Singapore will give us early clues about sentiment before US markets open. This is a moment of convergence for NIO. The question isn't just whether the stock can rise on Tuesday. The question is whether this delivery momentum, combined with a resilient base and a forward-looking strategy, can propel the company into its next chapter. The market is about to give us its answer.